Part of the reason SunOpta is building positive sentiment has to do with its plans to expand the distribution of its Dream Oat Milk Barista product to 6,700 locations across North America, with reports suggesting SunOpta could be partnering with Starbucks as part of this expansion effort, leading to expected growth metrics, boosted investor confidence for 2025, and support for the company's revenue base with some estimates as high as 20% volume growth. To get some context on recent events and future optimism, let's take a look at the company's background, offerings, and plans, while also outlining possible hurdles to look out for and concerns to be aware of. SunOpta Inc. is a Canadian company founded in 1973 that manufactures natural and private label brands, along with its own proprietary brands such as SON, DreamR, and Westlife. Their main product line consists of plant-based beverages like oat, almond, soy, coconut, and rice milks and creamers, which have a lower carbon emission and water usage compared to traditional dairy products. SunOpta also offers non-GMO, organic, and gluten-free products in addition to protein shakes, teas, broths, and fruit snacks. In October 2023, the company divested its frozen fruit business to focus on value-added plant-based and healthy snack products. SunOpta sells its products through various channels such as private labels for retail customers, co-manufacturing agreements with branded food companies, and its own branded products to retail and food service businesses. The company also produces liquid and dry ingredients for internal use and sale to other manufacturers. Its employees and production facilities are mainly located in the US and Canada, with a corporate headquarters in Eden Prairie, Minnesota. SunOpta sells its products through distribution channels such as food service operators, grocery retailers, club stores, and branded food companies. Most customers have contracts that can be terminated after a designated notice period. Some customers may commit to volume purchases or have long-term contracts. The company's top 10 customers contribute around 80% of the revenue from continuing operations. Many customers buy products on short-term binding purchase orders, meaning they aren't committed to consistently increasing their sales volumes or orders from the company. Add to that, some customer decisions are based on periodic bidding processes, which could result in reduced sales volume if the price offered is too high or reduced profit margins if the price is successful but less than desired. Losing a key customer would significantly impact revenues and earnings, since their contribution accounts for a large portion of SunOpta's overall revenue. Competition comes from major branded and private label food manufacturers with larger resources and brand recognition. But SunOpta says their strategically located manufacturing and distribution facilities, in-house processing capabilities, and innovation center give them a competitive edge. For private label and co-manufactured products, product quality, reliability of service, innovation, and price are the main competitive factors. For its own branded products, consumer brand recognition and loyalty, product quality, promotion, and pricing are key factors. Being in the North American food industry means they compete with large US and international companies who have more significant financial resources, economies of scale, pricing advantages, long-standing customer relationships, and greater resources for product innovation and marketing. Competition can also take the form of competing over limited raw material supplies, with competitors having stronger supplier relationships. SunOpta's main raw materials are ingredients and packaging materials, with key ingredients including oats, almonds, soybeans, coconut, apple, and sugar. The company identifies alternative sources for critical raw materials when possible. Ingredient prices can fluctuate due to factors beyond the company's control, such as weather and market conditions. To mitigate this volatility, SunOpta enters into annual purchase arrangements with suppliers and includes pass-through pricing adjustment clauses in its contracts. Raw material costs also fluctuate due to factors like energy costs and labor availability, which can impact the company's performance if not adequately reflected in pricing. The packaging used for over 95% of SunOpta's products by weight is recyclable, and the company works with suppliers to develop new technologies that reduce environmental impact while maintaining product quality and safety. Primary sources of energy for production are natural gas and electricity, with water being an essential ingredient in many products and crucial to manufacturing processes. Diesel fuel is used for product distribution, and third-party transportation providers deliver raw materials and finished products to customers. Most of SunOpta's products have consistent demand throughout the year, except for broth sales, which are generally higher in the first and fourth quarters. The company has a 24,000 square foot innovation center and pilot plant located in Eden Prairie, Minnesota, to support its product development team consisting of 21 highly trained food scientists and technologists. This team focuses on creating innovative food and beverage offerings while addressing product development opportunities for customers, such as new formulations, packaging innovations, and new production processes and applications. The company provides comprehensive application and technical support to customers from concept to commercial launch and ongoing manufacturing and processing assistance. Then, since SunOpta manufactures and distributes organic products, it adheres to standards set forth under the Organic Foods Production Act and National Organic Standards Board regulations. These products are produced using sustainable agricultural management practices, non-genetically engineered seeds or crops, no sewage sludge, long-lasting pesticides, herbicides, or fungicides, and food processing practices that protect product integrity by disallowing irradiation, genetically modified organisms, or synthetic preservatives. SunOpta maintains records related to organic production for 5 years and is subject to potential enforcement actions if found in violation of USDA organic regulations. As a food manufacturer and distributor, SunOpta is subject to federal and state regulatory frameworks such as the Federal Food, Drug, and Cosmetic Act, Fair Packaging and Labeling Act, as well as FDA and FTC guidelines on labeling, packaging, and food safety. They're also governed by environmental regulations like air quality, waste treatment, disposal, sewer, hazardous chemicals, and stormwater standards. SunOpta also complies with employee safety guidelines under OSHA to ensure workplace safety for their staff. In Canada, food sales are regulated by various federal and provincial laws, such as the Safe Food for Canadians Act, SFCA, Food and Drugs Act, BETA, Canada Consumer Product Safety Act, CCPSA, Canadian Food Inspection Agency Act, CFIAA, and Canadian Environmental Protection Act, CEPA. These laws cover aspects like food safety, packaging, labeling, advertising, marketing, licensing requirements, commodity-specific requirements, traceability, and reporting. The Safe Food for Canadians Regulations, SFCR, consolidated existing food regulations into a single set that governs all traded food products in Canada. The CFIA is responsible for the administration and enforcement of these laws and has the power to inspect and recall products if deemed necessary. Naturally, product recalls and withdrawals, as well as product liability claims, could have a significant negative impact on SunOpta's business, since they sell consumer products that are susceptible to contamination, spoilage, misbranding, tampering, or other adulteration, resulting in the possibility the company may need to recall or withdraw products, leading to costs like product destruction, temporary plant closings, and compliance or remediation expenses. Like any other food producer, SunOpta might face claims or lawsuits related to illness or injury allegations, potentially leading to uninsured or unreasonably high insurance-related liabilities. Even unsuccessful or unpursued claims can be costly and time-consuming to defend against, and negative publicity surrounding them may harm the company's reputation. One real example of these hypothetical concerns materialized in Q2 2023. Sunrise Growers, a subsidiary of SunOpta, issued a voluntary recall for specific frozen fruit products due to possible listeria contamination. The company has recognized $7.3 million in losses related to this recall, net of estimated insurance recoveries of $4.8 million. They may incur additional unforeseen losses and need to revise their insurance estimate accordingly. Then, in Q3 2023, SunOpta withdrew certain batches of aseptically packaged products from a customer due to a faulty seal traced back to an equipment misconfiguration by a third-party service provider. The issue was resolved in the same quarter, and none of the withdrawn product reached the consumer market. SunOpta has recognized $3.4 million in losses related to this withdrawal, net of expected recoveries from the service provider, which may also need revision as they work with SunOpta to substantiate their losses. More generally speaking, SunOpta faces inflationary pressures on costs such as raw materials, packaging, labor, energy, fuel, and distribution costs. They've noted attempts to offset these cost pressures through price increases may not always be successful. Furthermore, they highlight the importance of managing the complex supply chain effectively, as relying on third-party suppliers for raw materials, packaging, and distribution can cause operating costs to rise and margins to fall if they fail to perform in a timely or cost-effective manner. So while expansion efforts show potential, SunOpta must keep these macro factors in mind to manage growth and reduce risk, while also staying competitive. For more on SunOpta Inc. and other companies, follow Ascencore. Thanks for watching and have a nice day.